Capital gains tax is separate to income tax, and it's the tax that you pay on any profit that you make when you sell an asset for more than you bought it for. And crucially, it's tax paid on the gain that you make, not the total amount received. So common reasons that you would incur capital gains tax is when you sell things like shares or bonds, or a property that's not your main residence, or any kind of personal asset over the value of £6,000. Now, there are a few exceptions to this as to when you would pay capital gains tax. So for example, if you're selling a home that is your main residence, then you wouldn't pay any, assuming that it's less than 5,000 square meters. You also wouldn't pay capital gains tax on any cars that you sell, any government bonds, because they're completely exempt from capital gains tax, or any possessions that are worth less than £6,000. So things like furniture, paintings, that kind of stuff. If it's less than 6,000, then it's exempt. So you do also have a capital gains tax allowance. So that means if you do sell any of these assets that do qualify for capital gains tax, then you're exempt from paying capital gains tax on the first £3,000 worth of gains that you make. But if you've used your allowance up and you're selling assets that do qualify for capital gains tax, then you're going to be paying 18% on the gains that you make if you're a basic rate taxpayer, and then 24% on the gains that you make if you are an additional or higher rate taxpayer. So if you do think that you owe capital gains tax, you can inform the government through the CGT service on their website, or you can put these gains on your self-assessment tax return.